Ladies and gentlemen, welcome. My name is Alex Dvorkin, and I'm a managing partner at 4D Capital. We specialize in a very unique mathematical approach to the stock market, where we analyze the market and individual stocks in three-dimensional space, and when we do, essentially perfect order emerges. On top of that, we've developed a number of very powerful timing indicators, and when we combine both of those together, we can very often tell exactly what the overall stock market or individual stocks will do going forward in both price and time. I personally believe our work is nearly identical to what Jim Simmons was able to accomplish at Renaissance Technologies, if you're familiar with Jim. So today I want to record a very quick video and talk about what happened in the markets yesterday, and quite a few people attributing yesterday's sell-off to Michael Burry's 13F coming out and suggesting that, not suggesting, but indicating that he has a very large and aggressive short position against some of the front runners, in particular Palantir stock and Nvidia. So where's the list? Right here. So he has put options, which is a very aggressive short position against those companies of nearly $1 billion against Palantir and close to $200 million against Nvidia. And most likely he increased those positions because this is for the last quarter. So this is a very aggressive position. It kind of spooked the market, so at least it spooked some people in the markets. Yesterday's sell-off was not that significant in my personal opinion, but nevertheless, the tech did sell off, and people are beginning to kind of pay attention to this particular bubble. Now, our own work, as you know, we've been coming out and saying for quite some time that we are in a massive bubble. Even yesterday or a couple days ago, we recorded a video about the Warren Buffett indicator. We looked at Shiller PE ratios, which we're going to do once again today. Might as well just jump into it and talk about it again. So as I indicated much earlier and at many different occasions, we are in the most expensive market that has been ever recorded in the history of the stock market. This is the most expensive market, not the 2000 top, because as I talked about before, if we actually adjust the Shiller PE ratio for that period of time, because there were a lot of companies within the S&P index that didn't have any earnings at all, tech companies, if you recall. But if we make that adjustments, that PE ratio is going to be at approximately 35. So we're definitely above 29 top, 66 top, 2000 top, I would argue, and 2007 top, and the prior top in 2022. Beginning of 2022. So nevertheless, a point being is that we are sitting at the most expensive market in history. Now, it doesn't mean that the market's going to collapse and decline quite substantially, which brings us to this particular position by Michael Burry. By the way, if you're not familiar who Michael Burry is, there's a famous movie, approximately 2015, The Big Short. I'm pretty sure that anybody who's in financial markets probably watched that movie many times. It's a very well done movie, very fascinating. But he's the one who shorted the housing market. I was actually shorting the housing market as well at that time, but I believe it or not, lost quite a bit of money because I was a little bit too early, and I was doing it different from what Michael Burry was doing. I was actually shorting, if I recall, subprime lenders, and I believe I remember one of them was Lend. I think I forgot the name of the company, but I think it was lending something. Subprime mortgages. They were doing massive volume of subprime mortgages, and I remember looking at it approximately 2005, 2006, and I was saying, "Oh man, this company is bankrupt. They're going to go belly up." And I began to short the company. And there were actually a couple of them, but they were in a very similar situation. I, once again, don't recall the other ones. And they kept going up, 2005, 2006, 2007. I lost quite a bit of money doing that. But when they finally did crack in, I believe, 2008, in the summer of 2008, I remember Lend finally cracking, going basically from whatever it was, like 50 or 60 bucks to pretty much zero overnight. So the research was correct, the premise was right on the money, but my timing was terrible at the time, and that's one of the reasons I shifted my attention to making to working with mathematical approach that we have currently and trying to identify timing parameters for the overall market and individual stocks, which works amazing, by the way. But nevertheless, point being is that he took a lot of pain, but he made a tremendous amount of money, and he is known for that on Wall Street. And that's one of the reasons, once again, why it spoke to Wall Street, is because his research is very accurate. For example, Palantir and Nvidia and even Oracle, we'll look at the charts here in a second. They're all in this massive speculative bubble, and we talked about it over the last couple of weeks as well, where they are signing these contracts for billions of dollars, which is basically, for example, Oracle signs a contract with Facebook. Facebook gives Oracle, $20 billion or whatever, and then Oracle signs the contract with Nvidia for $20 billion. It's a circle jerk, right? It's not real. It's a Ponzi scheme to a certain extent. We're just kind of throwing money around, and it's not going anywhere. But point being, or point I'm trying to make, is that in addition to this being the most expensive market, and this is the sphere of the overvaluation in today's market, and Michael Burry's position makes a tremendous amount of sense. Now, he's been early before. He's been shorting the market, I believe, over the last 2 years, and as you know, the market has been going up in various junctures, but this time might be different. And this time might be different because our mathematical work essentially agrees with his potential premise that the stock market is at the peak, and once that peak is achieved, the market's going to decline quite substantially. Now, our work doesn't indicate a market crash, although if you follow our war forecast, there's going to be a very important date coming up in December, middle of December. We call it December 13th, plus or minus 2 weeks, where something very important is going to happen in a geopolitical theme. We talked about Russia and something happening between the United States and Russia, not your willy-nilly kind of a exchange, but which could be a substantial exchange, and that has to do with a very important war cycle. I'm kind of shifting gears here all over the place, but point being, there's a very important time turning point that's coming up in the middle of December that suggests a very important geopolitical event. Perhaps a kinetic exchange between Russia and the United States will take place that will spook the markets. So in that sense, he is right on the money in terms of his short position. He's going to make quite a bit of money doing it if our timing indicators and work is correct. Okay, but I wanted you to listen to what the CEO of Palantir responded, and he's freaking out. But we'll look at the charts after this. But by the way, before I turn on this piece of shit, excuse my language, but that's what this individual is. Palantir, I will never forget this. This guy was asked about, they provide targeting information for the Israeli offense force, okay? And he was asked how they make the determination between striking legitimate targets or bombing hospitals and bombing children and women, and he laughed. He outright laughed at the question because, this is you're looking at a war criminal, but I'll let you listen to what he says, okay? So none of the things that he says makes any sense. He's just bubbling around, and so he's saying that, well, he just mumbled around, didn't make any sense, but he called basically Michael Burry, or shorting his stock, is batshit crazy. So that tells you quite a bit of everything you need to know about this particular individual, who is once again a war criminal in my eyes. Okay, so going back to Michael Burry and his short position, very interesting. I think it's going to pay off significantly. Let's very quickly look at some of the charts associated with this particular position. So this is Palantir. By the way, this is our three-dimensional mathematical work that you see the lines on the charts on the chart here. And as you can see, we were projecting a top right here, mathematical top for Palantir. It came very close. It came 207.52 a few days ago, and the actual projection was 214. So definitely within the margin of error, but the situation, well, what's saving Palantir is this particular gap down. So there's a very good possibility that before it actually cracks, it's going to reach to this actual mathematical target that we have for it, 214. And I'll show you how that mathematical target works perfectly. For example, we predicted the top on Bitcoin perfectly, as well as Oracle, Nvidia. So it's, as a matter of fact, let me just show you. So this is Oracle. This is going to be a very similar situation to what happened to Oracle, and it's currently happening to Nvidia. So this is Oracle. Remember that spike higher. This is the circle jerk that I was talking about, where they are promising each other billions of dollars, signing the various contracts, but it's just the same pile of money kind of moving around, and in very simple terms, right? As you can see, Oracle hit right into the top and been declining ever since, and that's going to be the situation. That this particular situation is going to continue. Nvidia, we did Nvidia update last week. We did a video on it. We called the top as well, and we at that time talked about a very similar situation in Nvidia. Came very close, definitely within the margin of error. Is it possible it's going to hit the target with a little bit more accuracy over the next couple of days, a couple of weeks? Yes, it is possible, but it's unnecessary. Definitely within the margin of error. Okay, so let me show you a perfect hit on Bitcoin, and we'll call it a day. So this is Bitcoin. As you can see, we were saying for a long time that it's going to top out at approximately 130 plus or minus $3,000 at that juncture, and hit right into our target, hit right into our calculations, and has been declining ever since. Very similar situation with gold as well. Once again, hit right into the target and declining. So point being is that Warren Buffett is correct, sitting on a massive pile of cash. Michael Burry is correct, and I think we're going to see some fireworks, particularly in that middle of December time turning point, associated with our war cycle, and possibly there being some sort of a kinetic exchange between Russia and China not Russia and China, I'm sorry, Russia and the United States directly. So that's something to watch over the next couple of weeks. That's it for today. Thank you very much for your time. We do have a free trial associated with our service, link in the description of this video. You can have analysis just like this, just a wealth of information, not only in terms of the overall stock market, but what individual stocks will do going forward. We have 52 mega cap stocks, we have fast movers, we have super equities as we call them, we have trading parameters for all of those. So if you would like to get an opportunity to take a look, please request a free trial, and we'll go from there. Also, we have a webinar coming up, I believe November 14th. I believe that's next Friday, if I remember correctly. So at 12 p.m. Eastern Time, we talk about the overall composition of the stock market, which we typically don't do in this free forum. We also showcase our software that can, for example, scan the entire S&P 500 and yield only the stocks that will appreciate significantly going forward within a relatively short period of time. And we also discuss how we calculate the market in multidimensional space. So with that in mind, thank you very much. We'll be back with another update tomorrow. Bye-bye.